let's say you have an individual who owns a piece of land which is worth £100,000. He then applies for planning permission. This is 10 acres of land. He then applies for planning permission. Andrew, he's applied for planning permission for how many homes? 20. Okay, so he's applied for planning for 100 homes. And the planning goes through. So how much is that land worth now, Imran?
10 million.
10 million. All right, good. Do you want to buy it? Okay. So let's keep it £1,000,000. But I like your enthusiasm. If you've got any JV deals, I'm open. I'm ready, mate. £1,000,000. If he now sells the land with planning, he's made a £900,000 gain, yeah? And he's going to have to pay tax on that. That's going to be quite a bit of tax, isn't it? And he doesn't like that idea. So there's one of two things he could do. He could enter a joint venture agreement with his SAS, yeah? Or he could sell the land to his SAS as well. But he could enter a joint venture agreement with his SAS, okay? And say, and he could even exchange. And the agreement says that if on obtaining planning permission, a certain amount of the gain, okay, because they're doing a JV agreement, a certain amount of the gain goes to the SAS. So you can either sell or you can do a JV. I think selling's better. So you can sell and then have an overage agreement where some of the income, I'm trying to keep this simple for you now, where some of the income stays with the individual, some of the income goes with the SAS. So let's say you've applied for planning, you've got planning, it's now worth £1,000,000, you paid £100,000 for it. The arrangement is that the individual gets 50% and the SAS gets 50%. Okay, so now you've moved over £450,000 gain to the SAS, and you're left here with 450 grand. Does that make sense to everybody or no? Yep. Yeah? So this is another way you can use a SAS. If you have a planning gain, you could shift some of that into the SAS, so you don't pay any personal tax on it. The SAS gets cash coming in, and the SAS can then loan that money back to you. Otherwise, you'd have to pay quite a bit of tax on that share of the profit. Everybody with me? Again, don't worry about the mechanics, just worry about the principle, as in this is something else you could do, yeah? And there's a significant tax saving to be had on this. So that's something you want to think about, especially if you're looking at planning gains on plots of land.